name is Mikelis Bastiks, and this is Asketic podcast, where we focused on building strong Baltic brands. Today, we're sitting down with Marijus Andrijauskas from Firstpick VC Investment Fund, where we discuss investing in early-stage Baltic startups and why moving fast is super important. I wanted to start about your company first, about Firstpick. Can you maybe quickly give a quick overview how it came to be and how you decided that this is the right time and format for you to work on?
Yeah, absolutely. First of all, thanks for having us here. And it's for us, it's very important to be in the entire Baltics, not only Lithuania. So we positioning ourselves, our entire thesis is, that we are pan-Baltic early stage fund. So overall, that there's not a big secret that an entire our team historically was already managing one fund under the SVG name that we're going to talk a lot about branding. So it was a strong red color known, in the Baltics. But after, investing entire fund, there was a decision for us, that what do we want to do next, So we decided, the entire team, that we want to have our own fund. What do we want a bit different? What do we want to do our community, with our investment, with our strategy? So yeah, we decided to do our fund, Firstpick. By that time, we didn't know the name, so there were like a very interesting creative process, how you becoming a name, putting very different names on a wall, on a white label, and trying to see what it means, is it meaningful? Is like completing, the strategy, and is it different, and so on. And an interesting part that we involved our founders community into this as well.
Into the name creation?
Yes, into name creation. And we ask, what do you think? And how do you feel about it? And so on. So, and to be honest, the Firstpick name one of the founders suggested it. The term actually came from NBA, those drafts, when there is this Firstpick, choice of Firstpick. And they said, you should to stream for that, and it's like, wow, that's cool. And entire our, partners and team members are also very deep into sports. We're doing sports, very different sports from, running, football, and then athletics, etc. So it's very relative to sports. So it's like, that's cool. That's very close to us, So, and we trying, to dive deeper what it Firstpick means. And we wanted that we are the Firstpick, for our founders to be the Firstpick, for the investor side. So we said, that's awesome. We want to build everything around that, to be the first pick of future founders as well. Be this first investor in the, cap table, in the the ones who believed in them. So yeah, we started to elaborate more on that. That's where we took a bit help of the, branding, professional branding, on the picking the colors as well. It's not the easy choice.
Yeah, but you have a significant color presence. When you look at the Firstpick brand, you can instantly see the purple as a brand color.
Yeah, but it's when you're going through this process, it's very interesting process, and we mapped out the entire ecosystem on the color palette.
All the players.
Yes, all the players on the color palette, and you're seeing what is what and who is like competing on this visual recognition, and then should we use the smaller caps, and then based on that, how do the merge could look like. It's a very important part, So especially when you're thinking about switching from this strong red into, you're still thinking from the, new player in the town, competition, being different, being young, being a little bit of punk, So yeah, and right after that, we enjoyed the result. We made a really good opening party with a lot of, our colors in that, and then lights in the sky, and then
in the specific color.
Yeah, specific color. And there was a lot of media about this that also helped a lot, to put all this color in the media. And yeah, that's how it started. It started a year ago on the 2022 November. We had this opening party. Now, after 1 year, we recognized brand, I would say, in the Baltics, from what we're hearing from ecosystem, from the founders, from the other investors, from our partners. we proud of ourselves as well. We are most active investor in 2023. We already
really?
did
In the Baltics?
Yeah, we already did 20 investments this year. So it's a huge number. And this actually is the part of this, launch strategy, branding, positioning, and of course, it's not only about brand and name, but of course about the work what you do and how you do it.
You mentioned strategy. Like how do you want to be differentiated from other players when it comes to investors in the Baltic region? Like what's your strategy or positioning in that aspect?
Most primarily, I would say, word or bullet point in the strategy is the speed. So basically, we're saying we want to be fastest investor. By fastest, I mean on the when it comes screening, when it comes the scouting process, the screening, how we review, how we respond to those potential founders who approach us, how we're making decisions. We are having those investment committees on a weekly basis when typically those pre-seed or seed investors they're doing not like fast, but they have their own process. They're doing in a different way, like bi-weekly or monthly, doing every week and making decisions and getting back to founders and responding and doing those intros, due diligence, diving deeper. And when it comes even a term sheet or investment agreement, we're also trying to be as fast as possible.
What allows you to be faster than, I think everybody wants to be fast?
Preparation.
Okay.
I think we were preparing for this fund almost 18 months.
Before
in
you
our
launched.
heads, in our let's say material, and then all the way how we wanted to build this fund, this company, this organization, let's say. So this one part, but another part, we are trying to be innovative, let's say this way, as well. We're using a lot of tools, automations, the same AIs, if we can use this, for some sort of the process. Everything
to analyze.
Yes.
Okay.
To analyze, the deal flow, to analyze even portfolio when it comes, how we call it, this, manual monkey job, what we can be automated and etc. We're trying to do this as most, smooth, innovative, automated as possible in-house organization. And, when it comes outside organization about the speed, you can feel it.
Yeah, I read about the speed on your website, and speed is a lot of times emphasized when it comes to startup culture, and you should build your product fast. And I think everybody's trying to do that, but it's not that easy because you have a lot of things going on. And do you have some tips or suggestions for someone who's struggling to move faster? How you do that internally?
I completely agree here. That's it's not an easy, and even us, we can say, we're doing everything smooth, but we're aiming, we're streaming to this, and I think the main formula is that we have super high standards for each other as a team, and there is very openly talking here, I believe that when you see Firstpick as a team, as organization, outside it's we're looking good, looking now shining, and we see that, and we're streaming for that. But in-house we have rules, we have actually high standards, and that's why we are doing what we're doing, and we are streaming for that. So it means that everything that could be better, there is no strings that should be better, and everyone knows that. You cannot come just, and be a vegetable or something like this. No. You should be very, very, sharp and on everything, on every level, So that's why it gives us,
But how do you balance between doing the best and not falling into perfectionist trap when you need to move fast? Like sometimes you want to polish things and be perfect, but that takes time. And then how do you manage that?
There is no company ultimate goals when you're aligning this. First of all, why we're doing this, why we're doing this, and then how we do this, and when we do this, and then there is those more like detailed, like OKRs levels that we say, okay, this is our this year goals, and we're dividing this in the months goals, and we have weekly meetings with the entire team. We're 7 people in the team. It's not a big team, but we going through this. What our current focus is, it leading to our those ultimate goals, and is it our efforts actually on the right time, in the right place, and how much time do we spend on this, like visibility, just showing cool, but how we actually spend on the actual work that brings value to the founders, to the portfolio, and we are talking all the time, and then when it comes to management, it's a very clear task, deliverables. If it's no one who's struggling, you should be very open that you're struggling, but those deliverables are super important, and we pretty strong on this task management as well.
How would you say, what is the main argument why speed matters, why it's important to move fast, both for you as a team and also for the companies you invest in?
Well, it's actually a really good question. I believe that we getting this very, very signal from our founders community that founders, once you start fundraising is super exhausting part for founders. It's a very, very, very exhausting part. It takes a lot of energy. It takes you out of the business. It takes out of you, building beloved products, and so on. And we're seeing that. And most challenging part for that is that founders don't get proper response from those other funds when they're raising, especially if there are some no warm intros and they're doing some cold approach. So we didn't want to be such fund even for cold approaches. So that's why we decided that we want to be a quite friendly fund. At least saying no is also good to know that you're saying no, not
and
like you're waiting. We're saying that like not polishing around the circling, but we're saying no, it's not good for us. So yeah, we're trying to do some bullet points, because maybe it's too early, maybe it's too late, this blah blah part that don't gives value. But in the meantime, we say, well, we don't believe in such a business. The market size is actually shrinking, not growing. The competition requires very intensive capital. We don't believe that a small ticket may change the rules of the games. We are more than happy to join if there's a lead investor, because we believe this requires a bigger ticket, right? We don't believe that you are the right person of the background that you can do, but if you can bring some, expertise on board, even advising level, maybe it could be enough. We're telling this to our founders, and founders appreciate that, because getting such info, it's way, way better than just silence or ignore or something like this.
Yeah. Well, considering that it's important to move fast, do you see there's also time when it's important to be when it's important to slow down and take things steadily?
In entire process of this game.
Yeah.
Yes. Yeah. I mean, it's the speed is good when it comes. We need to realize that now we're still, as a fund, have lots of competition.
Here in the Baltics, or in general?
In the Baltics, I would say, because even there are players like seed level investors who are now not even hiding this. They are going into pre-seed stages, and we know every player. We are very open with this, and it feels like we are all collaborating, but we are so small ecosystem. In the meantime, we are collaborating, but we are competing, and everyone knows that, So, and it's good. We have joint deals and so on, but getting to this question, so we do understand that we compete, and speed could be this differentiation when you can be faster than especially seed funds. Seed funds is taking a month when it comes to preparing the legal due diligence and so on. We can invest in your company in 1 week. So this is a very big difference from making an agreement. Yeah. And this is a very big difference. And founders buying this idea that, if we agree that invest you 100K, they can have literally money in their bank account, 100K in 1 week. And this is something, that makes us, on this fast-paced level. When it comes, what we should do slower, so I think naturally it dictates that, growing the business is a slower process.
Yeah.
Even we want, the companies, have a faster, on the growth and attraction, on the hiring, and then, validating new markets. But building a startup, it's not walking in the park. It requires time, and we need to know that it requires patience from our side, from startup side. So yeah, and patiently, we are helping startups to grow those businesses.
When you do the investment and founders receive the money, what's the main thing you're looking for them to use that money, and what things to accomplish?
So as we are super early stage, we are starting not even like a pre-seed, but we are starting in acceleration phase, when basically there is a team, there is MVP, there is zero revenues. In many cases there is zero revenues. So our aim, our goal is so the founders validate things. We do not expect that they start growing, but we expect that they prepare for the pre-seed rounds. And in the pre-seed round, you should get some answers. Answers are like, who are your customer? Or who are at least few of groups of your potential customers, right? What potential markets are you planning to go? So for the next round, you would get those answers, how much capital you would need. What is the gap in the competence, right? What potential hires you would need? Do you know where are those hires? Can you headhunt them? Did you talk to them, right? What is the cost of those potential customers? If you're in the business-to-business model, there is one cost. If you're in this consumer app model, there is another cost. So these are the answers that we are together trying to get. So we can all together build the agenda for the next round investor.
So you mentioned together, and you also say on your website that you invest not only money, but also your expertise and knowledge. How do you schedule your time, and how much do you get involved in each of those companies? You said you've invested in 20 companies in a year.
Yeah.
So that splits your time quite well. So how do you do that? How do you provide that value and also keep sane with all the companies you have to oversee?
It probably would be not possible to be involved in every company with a 7-people team. But what we have created in the last 5 years, I would say, the enormous involvement of our community network. Enormous involvement. People are actually our ex-founders, our professional mentors, domain experts are so supportive in what we're doing, and they are so involved in this, and they believe in Firstpick overall business model as a fund, as our accelerator. So we do have a 4-month accelerator program.
Okay, once you invest in the company.
Once we're investing, we can invest in the company directly without the program. We can do this. And there are, a couple of investments we did that. But we deeply believe that, when the startup coming in, we're investing not only cash, but this 4-month program. And they're coming in and they're getting from those, very, very basics, what is the startup, how to build, what are the typical issues between the founders, how to solve when you are burnout, what if you don't get those answers, et cetera, et cetera.
And you do that for individual each startup, or it's like a batch for all the...
That's the beauty of this, that there are this generic topics like workshops that fits to everyone. But when it comes to particular startup, we are connecting to particular person that can bring value to him. We have, people in network who build and bootstrapped businesses. There are hundreds of million worth companies, and we can get attention as the mentors, and we connect. In this 1 hour to one-on-one, the founders are getting of this. I just enlightened, I know what to do now. I was like, punched in the face, and it definitely was wrong to do this, and we should definitely connect to this and this. And moreover, when these founders, our founders connecting to our network, they're getting another connections that even we are not participating in this. And that's how they're spreading their own network. And when those founders grow, they raise, they become successful, they're returning this as a, not like favor, but as a belief in us. And, they're becoming even investors in our fund. Like in our fund, our LPs are, ex-founders who already are successful. So that's how it works, circle,
You're investing only in Baltic startups, and why did you decide to self-limit yourself to just Baltic states?
So, to be fair, I would say that we kind of get this limitation from our institutional LP because Lithuanian government is participating in this, and we are super appreciated that they are participating in this. Invega is amazing, how they're doing and supporting ecosystem. But the limitation is not only about this. We so much see potential in the Baltics that we deeply believe in the Baltic founders. And just for just giving you a number that despite the fact that we invested 20 startups this year, we reviewed 800.
Wow.
And that's an amazing number. There is so much potential, and it's more and more opening. Like today, I'm having 2 days trip in Riga, in Latvia here, and even starting Latvia organizing meetings with the startups. And we met yesterday 10 teams we never talked to in this year.
Okay.
And there was amazing teams. So there's the right founders, good ambition, building amazing products, and there is so much potential founders here. So yeah, definitely want to work here.
Yeah, you're doing this Baltic startup report every half a year. Can you give a quick overview of why you're doing that and what's the aim of that, and then we can dive a bit deeper into that.
We are very into numbers. I'm personally very into numbers as well. So we kind of were scrapping a lot of data, first of all, for ourselves to understand where Baltics was, 5 years ago, where it was 2 years ago, how was those ups and downs, turbulences during, pandemic, now during the war, and then where is it? Is it getting back, or is it flat, or is it going down? For us, first of all, as a fund, to understand. Then we a bit disclosed the data to our investors, to our LPs. So this is the data, and we say, wow, this is amazing. And we started doing even more analysis. In the meantime, we know that the Change Ventures as well were doing this, data report, and we as a two parties know how time consuming it's actually to collect on the data, to scrap, to connect all the founders, to get, details about the round sizes, involvement, who invested, what terms was that, what are the valuations, because everyone is waiting for the data about valuations and how is it, grow or drop. So it requires a lot of effort, especially, fund overall as organization is very limited in resources. We cannot have 10 people. We are not like a regular business that can hire 10 people tomorrow. So we should do with our limited resources, even Change Ventures should do with their limited resource. So we merged this year and made efforts together to build this Baltic report. And it actually was pretty good. It was really weighted for the community. It was amazing feedback. And we are, continuing to do this.
I read the report, and that was my first question. How do you even access that data? It's not that easy that you just log in somewhere and just scrap, just get it. You have to individually contact a lot of players. Or how does that look like? It must be very consuming.
It is consuming. It's actually, and you may know that one thing is getting data from a media. And let me disclose the thing that when you're reading on a media that company A just raised 1 million. It's always how it's going to be 1 million, 1.2 million. But in the reality, there is a bit different numbers.
The terms are different.
Different terms, different round sizes, different participants. round may be closed even a year ago and only now announced. It should be kind of so we definitely have some data about 30% that we could never get the real. We could never get the real data because it was disclosed and never on media and so on. But about 70% of the data we're actually getting pretty detailed, pretty clear. We are approaching the VCs, our dear partners, investors, funds, and as well founders. Yeah, so we are, hi, congrats, how about we share?
Do people share? Are they willing to contribute, or you see that people are a bit...
They share. I would say when it comes about sharing information and sharing knowledge, the biggest change what happened overall in the Baltics, and I can relate it as a ex-founder, being myself for 11 years as a founder as well. I have different attempts building my own startups, and raised capital from investors, and I can see a very big difference now that when the capital comes to the Baltics, and by capital I mean not only local VCs, but many international VCs come to the Baltics and started to invest, and startups stopped compete to each other regarding capital. Not like vertical or business, but regarding capital, they starting to share knowledge to each other. So it's like I'm sharing with you, my experience, but I'm not afraid anymore that you can raise, and I'm not raised because there is only one fund who giving to the Baltics, money. So that time started to change 5-6 years ago, and it's completely now different. Startups do not compete to each other regarding capital because there are so much capital, Of course, it changed on a many levels now when it comes to the war perspective and then the economics perspective, etc. But overall, this has changed, and they're sharing information. So it's not a big deal to disclose, some details of the round and then the terms and valuations as well. So,
how do you see the landscape after doing this report, like in terms of Baltics, then Europe, then maybe a bit global context? What are your afterthoughts after doing this?
So mixed feelings. So from one side, we're seeing really good, signs on the early stage, and the number of the pre-seed investments still promising. There is a lot of startups who wants to try this entrepreneurship shoes, and then founders who are coming from universities, and we're seeing a lot of buzz and movement from universities, hubs, venture studios. So early stage is booming, and it's a good for us as a first pick, early stage investor, and so on. When it comes seed plus stage, there is a bit more concerning situation.
And seed plus, can you quickly give a definition?
Yes, seed plus, it's typically when I'm talking late seed stage, that we would having 20, 30 seed investments per year in the Baltics on a good time. Now it's dropped to below 10, and the same like we on a good times we had like 10 to 15 Series A investments in the Baltics. Now we have 2-3 investments.
And the difference between seed and Series A is just the amount of money that's invested?
It's maturity, it's amount of money. Yes, it's basically the maturity of the startup. An average taking, in the Baltics 3 to 5 years to go to Series A. So,
but is that a Baltics phenomenon, or just is it like a global thing?
It's a global thing. That's how we say that Baltics on that level, when it comes to later stage, we're more seeing the same trends, what's happening in Europe, what's happening in US. It dropped. So from one side, from venture capital perspective, that's a good sign that as well, it's kind of back to earth when it comes to those valuations. There is no those utopic valuations that from the year, and everyone was like riding on those valuations. So now it's like based to the formulas, to the math, to those, by the book calculations, how it should be. But in the meantime, VCs are not rushing to make decisions. They are watching the landscape, what's happening, but as well looking for good opportunities. And those opportunities are kind of struggling because if you're locking seed, it's naturally you're locking later rounds as well, right?
Okay.
So it's.
But does that change also how you look as an investor? Do you see that you want companies to be more profitable instead of growing fast?
So very good question. I think looking from venture capital perspective, especially in early stage, profitability is not a key metric. The most important metrics is how fast you can grow, meaning even if it requires to burn money. So that's why you're taking this money. But if you can find the growth formula, then you're trying to find how to scale this growth formula. And many startups are doing this mistake that they are, I need capital to scale before they finding what is the growth formula. So saying this in a very simple manner, so if you start scaling, the things are not working in your startup. So basically you have replica of the things that doesn't work. And you're burning, and at the end of the day, it's not working.
Growth, no
not
money.
Growth, it's game over. But if you find something, that's actually working, you're getting a good, consumer profile, you're finding, this acquisition cost, the unit economics is working, and it's naturally requires capital for this marketing, sales, and it's more and more capital requires because there is so much noise on the market, so much, startup marketings, we are getting very tired of this, buzz, what's happening on our daily life, on social media, so on an ad perspective and so on. So it's naturally requires much more capital than 5 or 10 years ago to be visible, even in early stage. So it means that startups are burning money, spending a lot of to become visible. And in early stage, you're not required to be profitable. But in later stage, it becomes important part because now when you cannot raise, so getting much more challenges to get a seed round or Series A round, the investors saying, guys, maybe you can, a bit decrease your spend, this burn money, and not like necessarily becoming a profitable, but at least being break even means getting to this what you spend and your earnings come in. So based on this zero line until the times get better. So this requirement comes, especially in the later stage. Yeah.
And what's your view of like bootstrapping a company versus looking for investors even in the early stages?
Oh, I'm a big fan of bootstrap. So even being now on the investor side, but I'm a big fan of those bootstrapper companies. And we have phenomenon in Lithuania that we have NordVPN, bootstrapped company that's amazing team, amazing founders, and this is a really great example how you can build a unicorn. And the guys, got unicorn status last year, and even this year they, double up the valuation to 2.6 billion. It's crazy, and it's bootstrapped company. So we have, Omnisend is another, bootstrap company. We have Board Panda, another bootstrap company. These guys are doing amazing job. So I'm a big fan of, bootstrap companies, but it requires extra skills
to do that.
It's not like and when I'm talking about bootstrap company, I'm talking about even Kilohealth, right? It's amazing how did they bootstrapping and reinvesting capital and growing and so on, but it requires extra skills. It's from one side, getting this venture capital direction, you're taking, the capital, and then you're experimenting, and the things may work, the things may not work. Everyone understands the risks. Bootstrapping, it's like a different species, founders.
What
And,
skills do you think are necessary if somebody's considering bootstrapping?
wow, it's like being super insightful, very big hustler, ability to attract, people and then execute fast. It kind of sounds same like going after those venture capital, but for me it's like I would like to put all those bootstrap founders on this chair and to ask millions of the questions for them as well, But yeah, we're looking to those founders like, well, nice job.
Okay. So because in a way they are bypassing you as a fund if they're doing that in the early stages, right?
Yeah, but we kind as well, want to step in such companies and saying, hey, but maybe you need some, extra, fuel, and then it's not like pushing that investment ticket, but of course to be with such founders, that's a good way to be, So these guys understands how to spend, this €1 and to get, 2-3 euros back. They understand, the unit economics. Then they find the growth formula from day one. You can, boost the scale up thing, So because the bootstrap is, they found the growth formula. So all you need to is actually to help them to scale the things up. So yeah, that's something,
Maybe you can share some other insights from the report that stick to your mind. One of the things that stood out for me was, it's like maybe a small metric, but there was mentioned that convertible notes in pre-seed rounds jumped to 71% versus only 40%. Like, can you comment on that? Why is that an important thing, and what does that signal?
Convertible note, convertible debt, so basically convertible instrument is the tool that actually can be executed very fast. So it also matters a lot on this speed element, and we are
about speed.
Yeah, about everything about speed. When it comes, to this equity rounds, and of course it requires a bit longer process. It requires, go to this legal aspect, registration, shares issuing, and so on. And, convertible instrument that you can execute very fast. So basically, signing the agreement, you don't need to go all this, share registration process and so on. So that's why it very, very depends on the speed. And I could relate on that, probably that.
Do you use convertible notes?
Absolutely.
Okay.
Yeah, absolutely.
And then how do you use them, and what are the things to pay attention to when you're doing a deal with a convertible note?
Yeah. Overall, there is no like such huge difference when it comes to a regular, investment agreement. On terms level, it's a very, very similar. Even you need to be aware that to align those general terms, on a term sheet and to put on the non-convertible instrument agreement.
Well, like, what are the basic terms on the convertible note?
The terms, how much capital you invest in exchange for what, share in the future share, and there is some sort of the agreements, pre-agreements. It can be, what if, and some sort of the discounts or agreed valuations, caps, that can be very various, options how to do that. And then, regular terms about, founders' involvement, about some rights in your organization. So basically the same. But the main difference when it comes to speed, it's actually about this, that you don't need to right after investment agreement to go and to issue those shares, to do no change in the company, cap table and etc. It could be as an agreement. So basically, if we made an agreement, we sign it, I can initiate literally a minute after that this investment process, so the money would arrive in your bank account. You don't need to go through this, process.
And when you invest in a company, how much involvement do you want to have in the company?
Yeah, so we are not, we are very transparent. We're not hiding this or this. We are happy to have, 7-8% in the company. Sometimes we are, participating with a smaller amount, 5%. Sometimes we are participating with a 10%. when it comes, to more like risk deals or bigger tickets. So we are trying definitely not to jeopardize, companies' cap tables and to take too much. As well, we are trying to help founders to solve cap table challenges when they have from previous investors. If there are some co-founders, they are not participating or acting in the company. So we're doing this. But overall, being fair enough, in early stage, we are trying to have, 7-8% of the company.
And how often do you meet each of the companies you have, and like how does the calendar look in collaborating with the investment?
How often we meet?
Yeah, I mean, if you have, let's say, 20 portfolio companies in 1 year, then you have 40 in next year. Like, how do you spread out your time and your involvement into each of those companies?
Yeah, but in the first 4 months, especially when they are in the program, so it's basically some sort of interaction on a daily basis, because they do have, the marketing week, sales week. We have a sales coaches, in-house sales coaches, who are doing those bi-weekly meetings, but in the meantime, bi-weekly meetings on the goals and the strategy and so on. But in the meantime, there is a lot of happening, on the organization, on the hiring, on the preparing for the fundraising. Those 4 months is intense, but and we are super involved in those companies. But after those 4 months, when the program is ending, it becomes more those unofficial board meetings, we call them, and it's we have those, preparations, how to do with the reporting with the company, official meetings, team is coming in, and then we're having chit chat. But every relationship with the founder is a WhatsApp level.
Okay.
It's a WhatsApp level, messenger WhatsApp level, and everything that, hey, we have a challenge, or hey, what do you think about this fund? Hey, what do you think about this person? Should we have? It's like WhatsApp level. Every partner in the company have, owning their own portfolio company, and they are like WhatsApp level. The same as we are connected to entire ecosystem community. Like, if I need some opinion, like from Andri's, like Change Ventures or something, it's not about reports we're building. Say, what do you think about this? And it's like, you should, dive deeper here. No. Okay, thank you, Andres. It's always about that.
And when it comes to branding and building a brand for your portfolio companies, what's your view on that, both in your stage as where you're investing and also when they grow bigger? And at what stage should companies put emphasis on that, when it's a distraction, when it's important and critical?
Yeah, that's an interesting question. I think in the early days, it's more like personal branding plays than company branding, because from the founders perspective, I mean, yes. So because in the early stage, like we're investing, we're not looking how strong is a brand or how cool is a brand. Ability to build a strong brand is very important, of course, because sooner or later it requires to have the strong brand. But for early stage, you invest in the founders, in the founding team, in the core team, and this is more like personalities and the background, the experience, the network, so that's what you are making decision based on, not like young company brand. Later, when it comes, of course, like seed stage and then later stage, you're focusing on this brand, and brand is built a lot on this, consumer, on the customer, on this not only front office but back office, customer support, customer success, marketing, PR, and then this visibility. It very varies. If you're in the B2C business, it's one part. If you're in B2B business, it's a bit other part, right? And then later stage, of course, it's streaming to become brand hard to kill, and that's why you're spending a lot of money on the marketing and brand.
What aspects of branding you've seen in your career to be the most essential ones, like whether it's building a brand personality or working with the internal culture and the branding internally with the team when you need to scale and get good employees fast, or building the external image, like all of these things that can be put under this branding term. What have you seen stand out the most?
I can pick any brand.
Yes.
I was and I am, a very, very big fan of Pipedrive.
Mm-hmm.
I know Estonian startup, a unicorn, and I was, looking from a day one, and I know the founders well, and I was really, really like big fan of this company. In the meantime, but I was building as well my own startup. It was competing but I loved, the idea that they were like transforming this software market, like CRM market, and how we communicate salespeople to salespeople. There was first approach and first attempts to making it super friendly software. And they actually succeeded to do this, and in many ways. And as well, the company culture, how they build it. Later, there are so many startups took it as example, and I see it even today, how you need to build a brand to be consumer friendly, and then what it means, believe in the brand when you're hiring, people. So from today's perspective, I really like the way how some of our portfolio companies are doing. For example, Kevin, they're doing a really strong brand in the payment sphere, in the fintech payment sphere, and it's a brand that becomes very recognized, in Europe, and then I believe it's a matter of time it becomes global, brand. So yeah, and it's super important when it comes to attracting those talents in the later stage, that to headhunt someone from a company who gives you, a good benefits, salaries, and perks, how you can go to a startup, right? So it should be brand. It should be, name that you trust, that, you recognize, that you should be proud of every day walking to this, startup where you're working. Yeah, I'm working this company,
Yeah,
so
to have a good reputation.
of course.
Like you mentioned in your LinkedIn profile that you're an analytical and creative thinker at the same time. How do you see those two sides that sometimes are viewed even as opposite, to work in benefit of you and the work you do?
I appreciate that someone is reading LinkedIn profiles. Thanks for that. But yes, creativity and numbers, it's my gift and my curse, so I really like, the numbers. I'm very into this, and in the meantime, I have a strong this creativity side when it's very easy for me to come with some ideas and then brainstorm very quickly, to jump into some workshops. So from that side, I feel very comfortable. Even in the Firstpick, as our fund, as organization, to add creativity when it comes, to standard process or standard, cycles. How about this? How making it different? And the numbers approach is still, when it comes, data. I love it, and many people, love the data, and especially when it comes, to investment side, many investors mostly accept data. So data is something that it's credible, that if you operate with the data and you know your data about the competition, about the landscape, about market size, it's a data, it's a numbers. It's not like it's big, there is a lot of opportunity, you want to go. No, how big it is, right? How big is the opportunity? So you should know the numbers. So yeah, this creativity and numbers, it's probably something how the Baltic report has burned as well from our side, how we change things, in the process of the company. So yeah.
In the maybe the last chapter of this conversation, I wanted to maybe pick you on the interest of our own, and where our main focus is a branding design studio. But from time to time, we've been doing small investments in the form of sweat equity.
Oh, you do?
We have, yes.
Okay.
And
Nice.
so if you could maybe guide me through how you would look at this situation, how you would suggest to do it, at what stage, in what format, and like what would be the elements you think are the most important in any particular stage to work on. So probably an early stage startup doesn't need a full branding package. It's maybe, even if they get it in form of sweat equity, it could be useless, and that will probably change in a year or so. So what are your thoughts? Have you maybe seen samples that are good case studies that could be replicated? And
while it's not 20%, it's good to go. No, I'm saying this, in a funny and in the meantime serious way, that investors, we having this fun, saying that the number 2 reason why investors are not investing in the company, most probably the cap table is broken, and
from
by
the
that,
beginning,
and by that is that maybe there are some, ex-founders who are already not in the team. Maybe there are some early investors who have too much shares, but they are not already participating. So what it means? It means that mathematically, this is the game's all about the numbers and formula behind this. So that's why we have this early stage, pre-seed stage, seed stage. It's not just names. Every time the founders they raise the money, it's typically they're losing losing is a bad word. They're exchanging the money into 8 to up to 12, sometimes 15% per each round. What it means? It means that they dilute themselves this amount of the percentage, right? Every time. So imagining that they need 5, 6, 7 rounds to go to this end game, and that game is acquisition or
IPO.
the IPO, let's say, so liquidity events. So it means that they dilute themselves this particular amount. So if they start in the beginning already giving away those 20-30% of the company for these early investors or venture partners or venture studios, so they're already diluting themselves like from a day one,
significant amount,
and they're losing control too early. They're losing control even after Series A, and investors doing these quick math and calculations, they know that the founders can lose control typically after Series B, when there is a professional, C-level management, board advisors, ESOP established. It's very normal. But before you going this, founders, it's a good thing that founders won't lose control, on the company. So that's why this, not jeopardizing the cap table from a day one, it's a very important part. It's a mathematically,
So what would be the sweet spot, you would say, in terms of percentages?
No, it's a few, let's say this
like
word.
a single digit or?
Single digit.
Yeah.
It's a single digit, for sure.
And the format, like what I've talked to Ernest and some other people from the startup world, they suggested this convertible note. That would that be the format?
Could be. Yeah, could be. Like from one side, it's still like instrument, but in general, you would probably need to do this math and calculation, and like if you as a company, as an agency, investing your effort, your hours, that could be built like, I don't know, let's say 50,000, right? Like 50,000. And then you can equally count and calculate how this 50,000 would be worth, if it would be like direct investment or something like this. It should be the argument how it's actually become those 5 or 6 or 7% in exchange on a deal. It's not like I want 10 or I want 15. It should be some, especially if there is like continuous delivery. Especially if you have a contract and you continuously link on those pre-built towers that are not going to build for the startup. We're seeing those partners in the development as well, what's happening. So
so it is easier if there's an investor doing investment, then you just do it alongside, and they have a valuation that you can put yourself against, and that it's easier then. But like, at what stage do you think that would be the most beneficial for investors, for the startup itself?
In what stage? What?
Doing this, like a deal with sweat equity and branding, and
it's typically it's an early stage game, let's say, playing with those sweat equities, but But to see, we see this, still in a pre-seed. Some companies are very, strong founding team, and they missing some sort of a skill, and they outsource it, and they getting into those, deals. So we're seeing this in early stage. It's happening, and it's happening more and more often. We're seeing this venture studios appearing as well.
Venture studios meaning?
Venture studios meaning that they have this professional service like expertise level or development or even like professional design or strategy or brand.
And they're not investing cash, but with their services.
Yes. So it's appearing as a business model. It's happening, and but once again, we're seeing this happening, that sometimes those venture studios entering into startups and like taking 20%. So the young founders, they don't realize, they see it as a fair deal, and maybe it is a fair deal by that time. But when it comes to real venture capital,
it's a problem.
That's kind of a challenge. But if I come to you and say, look, you guys have 20% now in the company. How about we invest? We determine the real valuation, and even your 10% becomes more valuable. Would you agree with this? And most probably you would say, let's do it, because otherwise, if it's not investable company, it's not like good for you as well, right? Yeah. So it's always about the conversation. It happens even in a later stage, We're seeing those examples, from my previous experience as well. I can say that even later stage investors who coming in and say, no, these guys have too much, shares of equity. There should be some arrangements. The founders should take more, So it's happening, those conversations, when it comes to making a deal.
All right. Good. So
how about you? How you see this landscape overall? How it's changing from your perspective? Is the startup becoming more mature when it comes about branding, understanding the importance of it?
I think an interesting aspect that we've seen, that there's more and more performance marketing driven companies. And some of them are bootstrapped, some of them are not, but they're very aggressive on performance marketing and buying their clients. And it's always a balance. When you do performance marketing, it's usually like with a hammer on the head. It's like very aggressive, very loud, and it devalues the overall brand image. And in the early stages, it's very good that you get the cash flow in, and you need that to survive. And then at some point, you reach a stage where you need to attract talent. And then that becomes an issue when you want to get some more A-level players, and all your brand image is like performance ads they get the results, but the brand image is not super nice. Yeah. And then how do you balance that? And how do you find, like, the sales team is doing a very good job, but then sometimes like the overall image is questionable. And then we've seen some of those, and I don't know. Have you seen that being the case?
Yeah, absolutely. And how do you approach more like startups, or startups realize and getting more mature understanding, they're coming to you for help? How is that?
This year it's been the second one, but we're thinking of doing how to organize our outbound communication as well in next year. But that's been a challenge when it comes to, not the challenge, but like the observation when it's startups and tech companies that are very numbers driven, as they are, and that's where they're successful. But then how do you build a strong brand once you're above the survival level? And
okay. And how you typically, when the startup is coming in, I'm curious, in early stage, they do have this small tickets, if it's an angel investment, they have like 50K, 80K. If it's an acceleration, they have 100K plus angels, 150. It's still, having some salaries, of course, then building the product, and then, some sort of, goes to our marketing. And some of them don't have a ticket, and how do you see? Do you see this as a super risky business model to do like sweet equity on exchanging some pre-built towers or something?
That's why historically we have not been working with a lot of early stage startups because of that reason. They don't have a lot of cash to spend on branding, and we like to do it very thoroughly and do all, like, look at every aspect, and that's not like fast for us is weeks and fast for them is days. So it's like even the time frame is different. So we usually work with companies in a bit later stage, like when they're not drowning and they know they can survive and they have some cash to allocate to proper branding. And this idea about sweat equity started just because of that reason, that we see at early stages they don't have cash, and but they have a need. And of course, not all businesses, but those who are more B2C oriented, that for them it's more important to have an image that they're creditable company and they can be trusted. And that's why we started experimenting with that when we had founders approach that they needed the brand and the visual identity, but they didn't have any cash they could spend on that because they had only a bit for the salaries and the team, and that's basically
exactly that's okay. I believe that I would probably go as well go for it. Some part of customers would have this early stage. Of course, it's a super risky. You need to wait very long until So it's kind of this sort of the game requires time. But yeah, if it works, right? Especially in B2C.
I think one thing that's it's maybe a regard to the Baltic startups report you're doing, and even in the first segment you said that the Baltic states punch way above their weight with how much startups we generate, and we're almost on the same level as the startup land of Israel. That's usually, that also Andris mentioned when he was here, that we have the potential to be a story similar to that. Can you relate to that? And you see that the trend is going upwards?
I think it's very correlates to this early stage that we mentioned, that it's a very positive signs on this early stage. There is a lot of movement, a lot of new founders coming in, starting to build this. When it comes, to this correlation, or trying to, see how we look in the European perspective, I like this, that we see, Israel as example for the ecosystem, knowing the fact that everything has started also, from this godfather of Israel startup ecosystem, and then grow into enormous number of the unicorns that the ecosystem. And what's the population? Up to 10 million, right? So, and this enormous success in one small nation, and we're seeing this as well in the Baltics. If we see how much investment per capita, how many startups, and as well like 12 unicorns, 13 unicorns already in the Baltics, and soon unicorns coming in companies. So it's happening, and it's now it's all the situation globally, it's not stable. Of course, we're in the region that these international investors, not international, even Nordic investors, are looking to the Baltics like, so it's happening. But I'm positive on that the things will get better, and then.
What should we pay attention for that to happen? Like, what are the metrics or the I don't know, the players in the ecosystem that need to be paid attention to in order for the trend to move upwards?
So for the startups, for later stage startups, everyone, I believe that everyone is aware now that getting this later stage investment, there is a lot of hustle, so it's not like easy money now, but it's still investable. It's still happening, but the numbers shrinked a lot. While in early stage, we have this positive note. There are many deals are happening, 100 plus deals happening, H1, and then most, on the this pre-seed stage, early stage. So yeah, a lot of movement here.
If you could have a message out to all the startups in the Baltic region from your point of view as an investor, like what would be the ending note you would leave us?
So the ending note would be this, that we should be very proud, first of all, what's happening in the Baltics. The ecosystem is glowing, and I would say this word is the best. The Estonia was glowing for a while, and then it's maybe this year it's a bit stopped, and it's a very good time for Lithuania and Latvia
To step up.
So it's and we should be super proud. Like as a Baltics, we should be super proud as a startup, as a universities, as a founders, as entrepreneurs, as investors. We are very united. We're very helpful, and I believe that's our formula of success. And I hope and I wish and I want that it stick to this pace and everything is going to be good.
Thank you.
Yeah.
Thank you. That's it for today, and thank you for listening. If you find these topics interesting and valuable, feel free to subscribe to Asketic Podcast at YouTube, Spotify, and Apple Podcasts. You can also write us at hello@asketic.com, and let's build impactful brands together.